right, so let's start on weekly call 8. Um, this is the market ending with 5:10, May 10, and we basically see the market is been going down lately because of trade war. As you can see right here, we've been down for 4 days, and then on Friday we have a nice bounce where we basically able to follow through on this one and get some gains. All right, so where do we think we see the market after this? I think the market will follow, continue with the news. I think late Friday after the market closed, there's a big news came out from White House that saying that they don't have a follow through schedule in from when they're gonna have the next meeting with the trade war. But there's an amendment from Trump that the China has to their self get their self done, or at least prepare, or at least propose, or get the trade done within a month. So we're looking at somewhere within June. There will be another. Um I would say there are going to be another follow through meeting. If that thing doesn't go through, then we probably will see more sell off coming. Um, my humble opinion, I don't think anything will be done, especially dealing with China, because I don't think they agree based on what they want to pay basically. So I'm hearing an echo. Is that from you, Jason?
Oh, I'm sorry. How do you mute this thing?
All right, so I think it's better, right? All right, so I'm not gonna talk a lot about the whole market. As we can see, we last week we talked about that. Hey, it's possible that SPX will go to 3,000, or we'll start selling off like this. So I've been expecting the sell off since a couple weeks. Now this is basically what we've seen, so that's a good thing. So far, SPX has been holding up the. Let me get my screen here. SPX has been holding up the 50 daily MA. So you can see right there the blue line. So in this case, I'm still thinking the market still have the little bit upside on next week. So we'll see where they're going. I mean, as long as there's no bad tweets, I think we can be in the range bound here and just waiting for the news. In terms of QQQ, let's take double check that. NASDAQ. And the same thing as well, it's able to regain the 50 daily MA. Let's check IWM and the same thing. Everything is solid, still good. Bullish, the bull trend is still up there. And DIA as a Dow Jones, and it's below. So this is something you might want to pay attention here. Dow Jones, anything under Dow Jones is possible a weak sector. SMH, semiconductor, it's basically just barely trying to save the 50 daily MA. All right, and then the last one is IVB Biotech. And we are basically, as I mentioned last week, it's the weakest, and it's still the weakest. So we have a mixed environment. Let's check oil. Oil also dropped, but it still regained the 50 daily MA and 200 for here. So it's a possible play for next week. We can see a little bit pop right here, going back to the upside. So that's something you wanna take a look on oil next week. So I have Jason here, and we want to talk about option. Let's go over option here a little bit. Let's say you mentioned about the Zillow, right, Jason?
Zillow. Sure. Yes.
Okay, let's take a look about Zillow. I believe you bought, oh, the 10 May is already gone, so you have the 17 May, which is what you purchased, right?
Yes.
So you purchased what, 44 call?
Yes.
Okay. You can see right here, when before you purchase any option and you play for earning, one thing that you want to pay attention is the moving here, the possible move. It's about $2, the implied volatility. That's what we call it. $2.27. So $2.02, I guess. Um, so if I believe Zillow was closed on Thursday. So let's make this thing bigger. Yeah, okay, this is right here. It's 34.50. So if the implied volatility basically saying about $2, so you might want to buy if you want to buy out of the money. Okay. Okay. What is considering out of the money? Out of the money is where the option price that you want to purchase or you want to sell is basically out of from or further away from the price was closed. So let's say $34. Out of the money will be 35. I'm sorry, 36 something, right? 34.50 plus $2, and so it's gonna be about 36.50 somewhere here,
How
right?
how'd you get that number?
Or just plus minus. Go back again here. I mean, yeah, that's kind of the idea. So you go to trade on toss, type in Zillow here, and go to option chain. Are you following
Sorry,
me?
I got a dumb question. How'd you even get to this screen here in Thinkorswim?
Oh, okay. So if you go, think our screen, go. Let me make these things smaller here. So okay, there we go. Now you go to you have this screen, right?
Y-
Just the regular screen on chart right here.
yes, I have it open. Mhm.
Okay. Now on the tab right here on the top, are you looking at my screen?
Yes, I am.
Okay, you have the trade tab.
Okay. Mine
Okay,
doesn't look like that.
how's your looks like?
Oh, I have to expand it. Oh, of course. Sorry.
No worries.
We're at what's that? 100.
Now you see the
I only
trade.
I only have 6 on here, but you have like
Oh
a
yeah, go
bunch.
change the strike.
Oh, strike. Okay, I have
Yeah,
4
go
only.
change it.
Okay,
I
so
select
all.
all.
Okay, now it looks like yours. There you go.
Okay. So now if
Okay.
you look May 17th,
Hmm.
you gotta see that the implied volatility or the IV is about 51%, and it's about $2.02 move. And this is
Okay.
for schedule for next week. You good so far?
Um, I did do a little bit of research on implied volatility,
Uh-huh.
but yeah, that part's still confusing. Like, sorry for ruining your
No worries. So
video,
as
but
well, the closer this is goes to earning, this thing will go higher, right? The implied volatility will go higher. So
hmm
that's why you need to pay attention if you play with earning. Like I said, I don't play with earning, but you just have to pay attention with this if you wanted to play with earning. Okay. So let's say the market closed on Thursday, or this stock closed on Thursday, 34.50 here
hmm
on Thursday. Now let's say you're betting, hey, you already have a right call, right? You already have that, hey, the company will beat the estimate and the stock will go up, right? You just have to pick the right
hmm
strike and the right expiration. Okay. My suggestion
okay, yeah,
is if you, let's say you buying the 17th day, which is what you did, okay. Um, now since we're looking at the implied volatility is about $2, so you wanna if you wanna buy out of the money, then you wanna buy, let's say 36 or 36.50. Okay. Now, one of the mistake that you did, you bought it all the way to 44. It looks cheaper, but it doesn't mean that you're gonna make money
Yeah.
because the stock
Uh-huh.
only estimate to move about $2. So it's very rare that the stock will beat the estimate and it will go up to about 10 points. Does that make sense? From
Okay. So
34
that
to
highlight, does that mean it's out of the money?
so
Where it goes black, does that
okay.
mean it's out of
So
money?
here's the thing. If you are in 34.50, right? Let's say on Thursday, right? It closed at 34.50.
Oh,
Anything this
mhm.
blue, that means it's in the money. Anything black
Okay.
is out of the money.
Okay. Okay.
Okay. Now, if you flip it to the put side, anything with the blue is in the money. Anything with the black is out of the money.
Okay. That makes sense.
Okay. Now, I hardly purchase option that is out of the money. I mostly buy in the money. So let's say I'm betting Zillow, that Zillow will go up to, I don't know, 36, right? That's the target, 36.50. Then what
Mhm.
I do, I normally purchase, let's say 34.50 or 33.50, but I bought more long-term time. So let's say I bought about 3 months to 4 months of far away. So for example, August, let's say August. So I don't have 34.50, so I have to buy either 30 or 35, right? So I buy the 35. That will still consider out of the money because remember the stock was closed at 34.50 on Thursday. Does that make sense? It just depends
Mhm,
what
mhm.
strike price is available. Okay, you can buy the 30, right? But you pay a little bit more premium. So this one is about $4, let's say $4.35 on average. But
That's
this
for
one is
420.
yeah 420 if you buy one contract, right? I'm sorry, you have to
Mhm,
look at
mhm.
on the asset side for $4.50. So in average, about in the middle is about $4.35. This one it's about 7.50. So roughly it's about $2.50 more. Okay. I
Okay.
normally
Okay.
purchase this one, the either the 30 or the 35, either one, whatever. It's the same thing. Let's say if the Zillow against my position, right, from 34.50, let's say it dropped to $30, right?
Okay.
So let's say it dropped to $30. So I do have two, 2 months. I still have 2 months. Basically, I can hedge the option, or I can basically hold it until it rebounds. Does that make sense?
Yeah. Yeah.
Because right now you're gambling,
Is
right? You're betting the earning. You never know what's gonna happen.
right.
That's one of the reasons you asked me, do I play earning? No, I do not. Because it's considered for me it's a bet. It's a 50-50 chance.
Okay.
But it's a good way. I mean, remember, buying call or buying option, that's not the only technique that you can do with option. Okay. Let's say if you buy this 35 and then let's say it's against you, then in the earning time you can also sell the call. You can sell weekly. You can sell this one. Let's say you sell, this is just an example. Let's say 34.50 and then this thing go down to $30. So of course the 34.50 is, let's say, become 50 cents, right? Then you can sell that and you can hedge that.
Mhm.
weekly. Okay, you have 1, 2, 3, 4, 5, 6, 7, 8 weeks to hedge and basically play, uh, try to basically hedge and let's say minimize your loss. Does that make sense? A good
Yeah,
example what I
yeah.
did with Apple. Okay, I'm gonna show you guys Apple. I did this Apple. Let me show you the daily chart here. This is the position I have on Apple. So I'm gonna show you guys. I purchased Apple here, and I mentioned it on the group that hey, there's a topping tail on Apple. I bought 200 put. Okay, so I bought it here. I'm sorry, I bought it around 200, so that'll be right here, this area. Let me find something oval. Okay, I bought it here. Yep. There you go. I bought it in this position. And then what happened? This is not earning, right? But it's against me. Basically, it keep moving up, it keep moving up, it keep
It
moving
kept
up.
going on.
Right. Now, I
Yeah.
did hedge my position here when it goes up. Okay. So I only bought 2 contracts and then I hedge here and it kept on going up. When it's going up, it's basically expired worthless. The hedging that I did is expired worthless and become a credit to me. Okay, so I get that, I don't know, maybe like $100 or $200. And then it going up again.
Mm.
And then there's an earning, I believe. Uh, oh, I'm sorry, this one. Earning is right here. So and then it keep going up. The market now is going down. Apple is keep going down. Now it hit 196. I did not sell it because I'm thinking, hey, you know what? I want to see it keep pulling back to this number, which is around
Mm.
193. Okay,
Mm-hmm.
so that's my target when I entry this. It did not, and then the next day it popped. This is earning, okay, and it's against me big time. So what I did, because I
Yeah,
purchased
yeah.
only 2 contracts, now on this level of 213, okay, I purchased another 10 contract on put 200. I'm sorry, put 210, okay. That will be out of
Mm.
the money, okay, because I'm expecting it will pull back at least. Now it pulled back a little bit, okay, and this day it pulled back, and then I sold it. It bounced back, okay. I sold. I gained some profit. I believe it's $800 on this one, but I keep the 2 contract on from this one. Now basically keep going down, and at here I hedge my position again for these 2 contracts, okay, because this still losing money, and then I hedge
Mm-hmm.
it more,
Mm-hmm.
keep going down, keep going down. In here, I sell my original 2 contract, which is make money in this one, right? As you can see, it's from 200, it went down to 193 something. This is on
Yeah, yeah.
Friday. Now, I expected the market bounce because, like I said, the whole market bounced on Friday, and then I sold my hedge position right here around 196.60. That was the target I did. So I'm making a double dip
Yeah.
position on this one and also on this one. Yes, I was losing money on the hedge because it kept going down, but at least net I was making money. Does that make sense?
Yeah, absolutely.
So debit and then credit, and then from here is credit and then become a debit. But net is a profit. I technically profit about roughly about $500 to $600 on this Apple. So option is a good uh, it's a good vehicle if you know how to play with the whole market. If you look at the whole market, if the market tanking, then you can also hedge your position if it's against you. If it's riding in your favor, then you will make money as well. I know it's probably complicated at the first how I explain it, but you have to train yourself to basically play with it.
Yeah, that's what I'm trying to do.
Yeah, I always recommend Toss basically has a paper money that you can sign up, and you can also play with their option with the paper money. Okay, and also feature too. You can play with their.
Hey, can we do like a future earnings, like just as a like an exercise?
Sure. Let's say, what do you have?
Cisco. What
Okay.
if I'm expecting it to go, let's just say, down on Wednesday?
Okay. So
Was
expect
it
it to
Wednesday?
go down.
Yeah, after close.
All right. So let's say now we don't know when is the market will close, right? The position. So this is just a sample. But we're gonna pull Cisco here. So Cisco, roughly about $2.60 move. Okay.
Mhm.
I don't recommend to look at. Remember, you only looked at because this is gonna be on the earning week. Okay. But when you
Yes.
purchase it, I recommend you to purchase somewhere in September or October. Okay. So let's say let's pretending that Cisco closed at this range. 50, what is it, 54? Okay, just
Hmm.
let's say 54. Okay, so 54 plus $2 or minus $2. So we are looking at somewhere 56. Okay, with the move, or 52. Make sense?
Okay. Okay.
Okay. All right. The other thing I'll recommend it always look at the volume. Okay, the volume on May. There's a lot of people are betting that Cisco probably will also go 55, or it will go to 50. Does that make sense?
Yes. Yes. Go ahead.
This is the volume, the high volume. Okay, it
How
doesn't
come I
mean.
don't have volume on my columns?
Good question. I don't know.
I have last, net, bid, ask. Unless I'm
Oh,
supposed to
why
manually
don't
add
you
them.
customize it?
Option chain. Do I right click? Nope.
Go to the top right here. To the left. So go to go to the option here. Do it.
Right click. No.
Volume. Oh, right here. Go to this layout
Uh huh.
and then select volume, open interest.
Ah. Okay. Okay. Now it looks like yours.
Yeah, you can also always customize it if you want. Okay, so now if you see volume, this is my suspicion. Okay, this is my the way how I research this. So if Cisco beat the earning and the earning is good and also the guidance is good, then we gotta see 55. Okay, if
Mhm.
it's not and the market is still selling off, considering the trade war is still happening, then we're looking at somewhere at 50. Okay, and it's also there's three possibilities. It will go up, or it will go down, or it will go sideways. So we don't know, right? Now I let's say I want to buy. So I want to go to October just for the sake. Okay, I'm gonna go buy in the money. 54. Let's say it's 54. I'm gonna do 52.50. Okay, I'm gonna go buy. So it's gonna cost me about $3.90 times 100.
Mhm.
Okay, that's
Oh,
remember one contract equal 100 shares.
okay,
That
okay.
will cost you about 390.
Yeah.
Okay, so in this default, I have 10 right here. Okay, now we can also go to what do we call that? You have the analyze order as what do you put? Analyze trade. If you right click on that, you can analyze the trade. Okay, so one of the things, so this is your position right now. If you, let's say, betting Cisco will go up to, let's say, by here,
What's that 1839? That number?
right here.
Yeah, on the yeah. Well, what does that refer to?
I believe this is considered as a profit or loss. This slide right here.
Okay.
I never use this, so I probably have to customize this a little bit better. Uh, yeah, but anyway, if it's going up, then this is where the profit and loss. Oh, I apologize. The blue line is the profit or loss. Okay, so let's say if Cisco against you, oh, I'm sorry, this is October, right? Yeah, let's say if it's against you by October and it never bounce, then you're gonna lose 3,900 because I have 10 contract, right? So let's say I put one contract.
Mm-hmm.
Okay, that will be maybe we analyze it. So that will be 390. Okay. Now let's say by 5/8, let's say by 5/8, the stock basically at 52.50 right here, right? Because you're betting it's just going to go up, but it did not go up, but you go down. So you are roughly losing about $53.51. Does that make sense, Jason?
Yes, yes.
Okay. Now, of course, that's on May right here. The purple line is when the May timing. Okay. If it's never it never rebound and keep going down. Okay, you gotta keep losing money.
Yeah.
Okay. But if you're going down or going rebound, then you gotta start uh, maybe a break even or making money. Okay, by October. Okay, your break even point is at 56 and 41.
Right
Okay,
at the zero line. Okay.
that's at the zero line. That's by October. You gotta have to know that's your expiration time. Okay, if by May, let's say if it's going with your direction, you're gonna gain about $183 if the stock basically go up to 56.50.
Oh, okay.
You know what I said?
Yeah, yeah.
Okay, you don't want to buy too far out, like 60. Okay, because you have to understand the move of the stock during the earning.
Yeah, this is a good tool right here.
Yeah,
It's almost like a visual, like a calculator. Yeah.
it is. Yeah. The best thing is you have to understand this. The expected move during the earning. What is it? $2.60. Do
Hmm.
not buy further out because it's gonna expire worthless, especially if you buy weekly.
Yeah, I found out that the hard way
Okay.
yesterday.
And this is also for everybody that watching this. If you want to place option, do not buy weekly option because you're gonna lose money on option. If you want to play weekly option, you want to become a seller. So a seller means you're gonna sell it. So this is another way to play with earning. Okay, and you have to be right. The reason why, if you're not right, it's gonna take away your margin. So let's say 54, right? The same example, 54, expected move about $2. So let's say I'm expecting Cisco will go up or go sideways. Okay. So I'm gonna bet that with the $2.60, so let's say 54 minus $2.60, so about 51.50 roughly.
Hmm.
So I can go and sell vertical. Okay.
Is this like shorting
This is like
basically?
you're selling it. So you're basically bullish on the stock, or you expecting at least bullish or sideways. As long
Okay.
the stock doesn't close by May 17, it doesn't close below 51.50, you're basically taking the whole money credit free and clear. This is the play that I normally play. Okay, I basically roughly about 70% a seller rather than a buyer. Okay, so let's say I'm selling this 51.50 and then I'm buying 50.50. I'm taking about 22 cents credit. Let's say I'm selling 10 of them. Okay, so that will be I'm taking credit about $220 if Cisco will expire or will the stock basically will go above, let's say going up, right? Or going sideways just on this side. As long as it's not closing below 51.50. Does that make sense, Jason?
Yes. Yes.
Okay. I believe you've been a member for a while. You see me basically playing with this a lot. This is called sell or it's called credit put spread. Okay. So if you want to learn this more, I recommend you to uh, Google here, learn credit put spread. Okay.
Mhm.
This is a good information right here. Bull put spread or credit put spread. Okay. Go read it because this is will help you a lot. Okay. I'm not gonna go deeper on this one. I don't think we have enough time.
No, that's fine.
So now let's say go analyze this. Okay. This is what I'm taking right now. My break even is basically 53 and 67. Okay, based on well because the stock it was 53.80 now. I believe. Yeah. So 54. Let's say I have 54 minus 22 cents. That will be my break even. Break even. You know what? Yeah. Put this thing out. I don't need to buy this. There you go. Yeah, good. So now as long by day 17, okay, if the stock going up, I basically collect 220. Okay, this is the whole profit right here,
Mhm.
the blue line. Okay, now what happened if the stock against me? This is something that everybody needs to pay attention because you have to know how to hedge this or to roll over. Okay, if you think If you think the market is still bullish, okay, we don't have enough another sell off, and you have the option to roll over to another week or maybe a further out, like maybe monthly. And that's what I did with my Tesla. I don't know if you remember. So let's say if it's against me, okay, then let's say the stock goes down to 50, okay. You should know this by the time the earning came out. You should know if you need to hedge or you roll over or you need to basically just leave it alone. Okay. If it's above, if it's doing bullish, going up, you just leave it alone, let it expire. Okay. If it's against you, then you have the option to roll over to, let's say, May 24 or May 31. You have the option to do that. Okay. Now, if you just let it alone, it's gonna against you and it's gonna take your margin. What is the margin? So the margin is basically the money that you put to bet the option. Okay. So let's say I bought this. This is not the right one. Oh, right here. Sorry. The top one. I need to delete this window. Okay, there you go. So 22 cents. Okay, and you can see right here the spread is only about $1 times 10. So $1,000. My margin is $1,000. That's the money I put it on the margin. Okay, to earn $220 weekly, which is roughly about 20%, right? If you
Yeah.
do this every week and you've been right every week, it's a good money. 20% every week, that's really good,
Yeah. Yeah.
right? So that's the reason why I play with this a lot. Okay, like I said before, 80% of the buyer will have their option expire worthless. 20% of the seller will win this. Okay, so does that make sense, Jason?
Uh, yeah, to a certain extent, but I don't expect to understand, exactly
Yeah, no, at least
what
you
you're
learn
explaining.
there's another vehicle to trade this, right? You're
Yeah.
not only
Yeah.
buying
That's how I
call
see
or
it. Yeah.
buying put.
Right. Right.
Okay, so that's basically what I show you guys. Of course, going back again, you don't want to buy blindly. You have to understand where is the support, the resistance. Remember, that's the first thing I
Hmm.
basically show you guys. That is very critical. That is support right here. 50 MA is another support. Okay, and then this is another support again. Okay, so you just have to know where's the play. I would rather sell the 50 put right here rather than selling the 52, the what is it, the 52, the 51.50. So I'm gonna change it to 50 right here and then change this to 49. It's 11 cents. It is cheaper, but it's much safer. Why? Because there is a support here. Okay. Now, if you buy call, you have to also understand where is the resistance, right? And where is the support if you're buying the put. There you go. Always go back to the chart. That's always my recommendation.
Okay.
Any questions so far?
No. No. Okay.
All right. So that's basically stock 101 and option 101. Hope that will help. So let's make more money next week.
All right.
Right, Jason? If you have any questions, you know where to reach me. So,
Yes, I do.
all right. See you guys. Bye.
All right. Thanks, John. Bye.